Hello guys, welcome back to another stock market update. It has been quite a while since I made my last video, and that's simply because the market's been extremely boring the past couple of weeks. It has gone up in a straight line day after day after day, which has been kind of pretty boring and pretty easy to trade. But I think we are getting to a tipping point in the market. This is going to be a very crucial week. So let's see what happens. So this is the monthly chart with a pitchfork laid over the price action. You'll notice that this trend line on the top here, you've seen probably all over social media. Prices failed at this trend line multiple times. Even if you extended it back this way, it would hold true back here. But look at where we are currently with our price action. We're about to get to that upper trend line, which could be 3600-ish area. So we should hit that in the next couple days. So when price gets there, we'll see what happens next. Notice this median line on the pitchfork. Price is hung out along this median line a lot, and when there is a divergence with price and it gets extended one way or the other, it always comes back to this area and kind of comes to balance here. Here it kind of came to balance and then it dropped, came up, and then was rejected here before it broke this median line and continued higher to where we are today. I think if we do hit this upper trend line, we could see a pullback down to this area, and I'll talk about that more detail here in a second. Next, let's take a look at the daily chart for the S&P. I want you to focus on the RSI, which is right here, this middle chart right here. Currently, the RSI in the S&P is the highest it's been all year. And if you take it back to 3 years, here's the RSI on a 3-year chart. The current daily RSI in the stock market is the highest it has been since January of 2018. January of 2018 was very similar to now. This entire month was just a straight line higher, and then out of nowhere the market just dumped, erasing the entire month's gain and causing quite a big spike in the VIX. If I remember correctly, I think the VIX went like from like a 15 or 20 to a 50 in the blink of an eye. I don't know if that'll happen now, but it is a very similar setup in which everyone's in a euphoric mode and doesn't think the market can go down. So we could see something similar. Who knows? Let's take a look next at the NASDAQ. We've talked about this big channel in the NASDAQ before, and I mean, currently, just take a look at where we're at. We're at the top trend line here. We're in full-on euphoria mode, and nobody thinks the tech sector can be stopped. Typically, when everybody thinks one thing, that is about the correct time to start thinking in the opposite way. So as we approach this resistance in this channel, I would be very wary. Here's the thing now, everything looks super bullish. I would not short when the market is super bullish because it can stay bullish for so much longer than you think. But one thing that is very certain is you don't want to be putting on any new long positions, or you don't want to be making any big purchases in the stock market right now. You just want to sit back and wait until there's a reversion to the mean and things come down a bit before you go long again. Now, while I am not going to go short the stock market, I am going to make a play that I think is setting up really well here. Let's take a look at the VIX. So here's the VIX. The VIX has a very common pattern that has always happened throughout the entire history of this trading instrument. But what happens is you see big spikes, and then there's a slow bleed until volatility flattens out. Then there's another big spike until there's a slow bleed, volatility flattens out, and then boom, another big spike. Notice that the VIX is starting to curl up. Also notice this purple line here. This is the 8-day moving average. It is starting to curl up as well. And notice that the VIX is going up as the stock market's getting in stocks can never go down mode. Those two things in conjunction are not very sustainable. So that's why I think we see a little spike here in the VIX. The way I'm gonna play that is through UVXY. Here's UVXY, same thing as the VIX pretty much. So here is the last spike we saw in the volatility index. On UVXY, it took us to about a 50. I wouldn't expect us to get over 50, but we can see a spike somewhere in here, maybe the 40-ish area or so. Something that really stuck out to me is when you look at the option chain. Let's take a look at this. If you look at the expiration for September 11th, look at how many strikes are on the September 11th chain. You have, it goes all the way up to 42. Okay, well, let's look at the next expiration, September 18th. On September 18th, the highest strike that is available goes all the way up to 260. Makes you think, why did they put 260 strikes for September 18th in the option chain? I mean, if you go to the next week, September 25th, it's back to 42 strikes. If you think it's because it's the major monthly expiry, well, let's go to October 16th. Still just 42 strikes. So, I mean, the fact that they put so many more strikes on here makes me believe that the market makers think something big is about to happen. So that's just another reason why I plan to go long UVXY later this week, or even maybe tomorrow possibly. So that is what I'm looking out for this week. Again, the SPY can go higher. I believe the SPY will go higher, but I also think some of these volatility instruments will go higher with it. And then eventually, when everything collapses, that should see a pretty decent spike in volatility from there. So that's what I'm kind of looking out for. I always like giving levels for resistance and support when I do this. So here we go. So resistance is going to be the top of this trend line right here. I think 3,600 is as high as this thing gets. And when I say 3,600 is as high as I think it gets, that means it's probably going to go a little lower, probably to 35, 60, 70 or so before we come back. On the downside, my areas of major support is, I mean, this is very obvious if you just look at these days. It's just solid green all the way down to right here, 33.95. So 3,400 is going to be the first major area of support if we see a decent sized pullback. If we go lower than that, I think 32.82 could be a decent spot to get long again. So that is what I'm looking for going forward in this market. Guys, thank you so much for watching. Please like, subscribe, comment on the video. Thank you guys so much for watching, and have a great week trading. Be careful out there. Things are getting frothy. Good night.